Welcome everyone to today's webinar. We're glad to have you here. We have some excellent guests with us here today. Today we're going to be talking about rebuilding financial stability, specifically strategic solutions in large community associations. So, a hot topic as we get into the budget season. With so much going on, whether you're being a condo association or a homeowners association, you're always having to deal with these with the money. How things are being moved, how much should be set aside, how much you want to save the association and whatnot. But we have two great guests here that will be able to answer many questions related to whether it be from the audit or financial side or whether it be from the reserve study side. I'll let each of our guests say a little bit about themselves. But before we get into that, I do want to let everyone know that the Q&A is available. So it's either on the top of your screen or at the bottom right. Go ahead and feel free to use the Q&A. Any questions that you have, either for myself, Alex, or Josh, feel free to place them in there and we'll do our best to get to them. If we don't get to them, we'll also provide our contact information at the end of the webinar so you can reach us either individually or if you have any particular questions that you'd like answered. We will post a video up on our YouTube page at managedbyaffinity.com. We did look at some stats recently, and we have close to 50% of our listeners are not subscribed. So if you haven't clicked that subscribe button, please click that subscribe button. We're trying to get to 1,500 followers before the end of the year. So enough of that. Let's get into the introductions. Why don't we start with Joshua here? Joshua, if you could say a little bit something about yourself and the firm you represent.
Of course. My name is Josh Hardin. I am a credentialed reserve specialist. Have been working with Association Reserves for going on 7 years now. Association Reserves is the nation's oldest and largest reserve study provider. I think at this point we've done over 80,000 reserve studies across the U.S. and really across the world. So hopefully you're in good hands today to answer any questions that you have with reserve studies, with budgets, and happy to help.
Excellent. Thank you so much, Joshua, for joining us here today. Alex, say a little bit about yourself and your firm.
Sure. I'm the managing partner of Leonardo Company. I'm Alex Leonardo. We've been in the industry for a bit over 18 years, and we perform conf reviews and audits for approximately 800 plus clients in the South Florida area, down to the Keys, to Stewart, and some in Orlando.
Excellent. Well, thank you so much for joining us, Alex. Always a pleasure to have both you guys on. As for myself, my name is Rafael Aquino. I'll be today's moderator, but more importantly, I'm the co-founder and CEO of Affinity Management Services. We're a community association management company, just focused on working with the right clients. Our process is pretty simple: align, execute, deliver. We're focused on helping our community association leaders execute their vision. So with that, why don't we get, rocking and rolling here with regards to financials. Again, we're in the midst of budget season. And Alex, I want to kick it off with you because, I know our managers are always constantly having to find, juggle things of, all right, how do we, try to keep fees as low as possible, with everything that's going on, whether it be inflation, whatever political side you take, but whether it be inflation, cost of things going up, what are some of the most common financial challenges large associations in Florida, would you say, are facing today?
The largest ones is trying to meet these regulations, and there's multiple ways to do it. And we're definitely seeing with the Sears now, et cetera, and it's a new item for the industry. So we're seeing different executions of it, some of it being done correctly, some incorrectly. I think overall the standard for everyone involved has been raised, because this is no longer a guidance report, a reserve study. In the past, as auditors, we would, our job was to confirm that if you're going to say that, if you have the assertion that you're basing something off a study, then the numbers should jive. They make sense. They were guidelines, et cetera, but they were still in the hands of the unit owners where they could waive, partial, or fully fund. But it's, the hammer is coming down now, and it's going to be a mandatory on the SIR size. So it's not just enough to have the study. You got to get comfortable with it, even though you're as board members relying on them. I would mention I've seen new vendors in the industry, right, on the study side, and we're taking basic math calculations and just trying to get back to the numbers, and they're not agreeing. And now you can't just put that to the side. I have to voice and communicate this to the board. Please go back, make sure that these numbers make sense, because in a year from now, it's mandatory. No if, and, or buts. So that's something that we've been our eyes have been very open to this and making sure we're communicating, and I'm talking to all my staff regarding that matter.
Yeah, I couldn't agree with you more there on that point, Alex, especially what you mentioned of things, how important they are. And in my eyes, I think it's actually leveled the playing field in the sense of, you had your HOAs or condos in that case that had their reserve studies, and now you had many condos and HOAs that didn't, and people moving into what they believed was something, okay, my fees are $400 a month, and now they're realizing that their fees are closer to $800, $900 a month. I could say from a community association management perspective, it's a difficult time the past, few years with all this new legislation, but similar to what you mentioned, Alex, we're coaching our staff and explaining, look, there is light at the end of the tunnel, because now these associations, whether they had reserve, now that they have reserves, will be able to complete projects, especially projects that are important to the community, that are life safety, that are life safety components. So, Josh, I'm sure you've had your hands wrapped around all that's been going on. How have you seen the reserve studies shift in the past few years? Obviously, your organization has been around for so many years. As Alex mentioned, there's been a lot of new players coming to the market, but it's always great to deal with someone that's been doing it for the length of time that you and your firm have been doing it. So what have you seen in particular in the shift in the past few years?
Sure. Like Alex said, there's a lot of new folks who are doing reserve studies, which is good. A rising tide lifts all boats, and good competition is always welcome. But I think it's important to remember a SIRS is a structural integrity reserve study. And if you're engaging with somebody, I would be very careful to make sure that they have done reserve studies before. Because like Alex has said, there's a lot of folks who are, I think, probably good intentioned, very, very smart people, engineering firms that have come out and said, sure, we'll help and we'll do the SIRS for you for doing the milestone and everything else. Only to realize that the reserve study is much different. It's more of a budgetary tool, and there's a lot of other math and calculus that goes into how do you plan out the next 30 years of the financial health of this community. So be very careful to make sure whoever's doing your study ideally has one of two credentials. One is a reserve specialist. The other is a professional reserve analyst, both long-standing credentials that require a large body of work over a number of years that basically prove this person knows what they're doing and can do a reserve study. In terms of priority shifting, I would be remiss to say that we've been only doing SIRS for the past couple of years. We've seen a lot more work coming from HOAs as well. It seems that the industry is starting to wake up to say, these are important budgetary tools. We're going to have to spend the money at the end of the day. It's, do we plan for it? We see it coming and we can budget accordingly, or do we get stuck and we have this massive special assessment that is very painful for owners, particularly those living on fixed income. The other side that we're seeing is from insurance and from lenders. They're starting to ask much more closely to see the copy of an association's reserve study to figure out what their risk assessment is. They're asking to see copies of the SIRS. We're even seeing it affect insurance. We had a guy we were talking to 2 weeks ago. He was underwriting policies and he was quoting umbrella coverage for an association at something like $5,000 if they had done their SIRS. And I'm not making these numbers up.
Wow.
He said if they had not done their SIRS, instead of $5,000, it would be $500,000 to write that same coverage, 100 times more. You're seeing everyone in the industry start to wake up to say, have they done a SIRS? Have they done a reserve study? And if they have, are they following it?
Well, that's interesting. I haven't seen that. I don't doubt it, right? Because we've seen a lot of different things, especially at I would say about a year and a half ago, that many of the condo questionnaires, specifically with condos, that they were requiring those engineering reports and reserve studies, and if you didn't see it, you wouldn't get a loan. So if there's an ROI and you don't have a reserve study, I mean, I think it just shows to you of how important having that tool is. One point that gets missed many times with managers as well as board members is, the reserve study gives you, a financial picture of what's to expect, but also you could utilize that as a tool to help you plan your projects. Many times that gets overlooked. The estimated life is most of the time you guys do a great job on getting close. Obviously, it depends where the components are located, but it gives you a good gauge as a manager of, being able to set expectations of, look, I know you want to do the lobby, but right now we're going to need to do the roof and we're going to need to do the front of the building. So it helps set expectations. And I think this helps us, kind of switch gears here a little bit and go into a little bit of budgeting reserves. I think it's important to touch on it since we're right now in the midst of budget season. Alex, bring you back into the conversation. How should board be, prioritizing their operating budgets, reserves, and those unexpected expenses that they occur, right? This is nonprofits; they're not setting money aside like businesses do. So how do you recommend? Because we have managers on the call as well as we have board members. How do you recommend finding that right balance?
So I would tell you, let's just start with best practices. We definitely see it on our side, the difference of who's using best practices, who's not. For your own internal, when you do these budgets, usually these meetings are multiple meetings between management and the board, right?
Yep.
And it's going back to the numbers and continuing going back. But the idea is have your prior year budget. It's September, end of September, you got 3 quarters of actuals, right? Or it could be June, it could be July of actuals. And then the property manager tries to estimate the last remaining months to come up with their estimated cost for the year. So they have a trend. They have prior year, they have the current year, what's going on, and then they start filling in what they believe is going to happen next year. I think some of the part where things fall short, that is the most immediate need. Here's my cash outlay, etc. But get to understand your balance sheet. People forget that when they get these audits and these comps and reviews. I can't stress this enough. On my own side, I've worked very hard to the management letter that's meant for the management company and the board. It's only for you guys. It's not for the unit owners. We're trying to identify any exceptions aside from the numbers to tell you things, to help you and learn better what you need to do, and then we get these due to froms, right? From operating to reserves. Well, technically it's a violation, right? At some point operating was funding their shortfall with the reserves. I can't believe how many times boards are not aware of that, and it's about at least put a payment plan in your budget, right? If you have a due to from for 100,000, and yes, you have the Sears, you have other obligations, but if you put 20,000 in your budget for that shortfall, that's a great thing. You have you created some form of a plan to get back and get away from that violation over time. And those are things you got to think about. What's sitting in the balance sheet that you don't know of that is actually a loss, and it's just not showing up in your income statement, but it is an issue. So those are the kind of things I definitely would tell boards to bring to the table.
That's a great point, Alex, that you brought that up. Interesting story. We're in the process of bidding on an association, and we're looking at the balance sheet, right? That's part of our requirement. We want to see the financials to make sure that they're at least in good standings, because, if they want us to do 10 projects, but they don't have the resources to be able to do that, we're not going to be able to help them execute that vision. And you nailed it on the head with that due to reserves. There's many times that we see that. And the boards just don't know, they're just focused on the P&L or the income and expense, depending how you have it structured. And they're just looking for variances. But in reality, there's many times that, you may have an over expense there, but how are we carrying that? Is that carrying over or not? And then all of a sudden, why are reserves short 3 to 4 years down the line? And that's just because they weren't taking a peek at their balance sheet. And again, it's important as both managers and board members, as you mentioned, Alex, is just to have that communication, right? That's the importance of when you get that audit or the compilation or the review, go through it, get a good understanding. And if you're preparing a letter for them, that, that gives you an extra, information to be able to make better decisions as a board.
And hear this is, I'm going to say this because, right now, you're required to have these reports, right? You're getting an outside party, you're getting a professional, less subjective, and you're going to work really hard to get the engineers and yourself you're going to have a plan. But there's never been a better time when you've had these issues where you have 300,000 and due to froms, where all this could be discussed all up front, because what used to be taboo before is not, right? Like maybe you did have that loss. It's okay. You used it in operating, but you could go to the majority and say, listen, we have a plan now. I'm not going to pay back this 300, but I'm going to recalibrate. My study is going to be based off this number, not the number that we were supposed to have. And you could put that all in front and start from what you really have, right? Instead of coming to the community and say, give me 300,000 that they don't have. But you could do it in the proper way, in the proper channels, get the vote. You have the new updates that happen with these laws have opened a lot of good things for the community on how to address their responsibilities.
Yeah, that's a great golden nugget there. Yep, a great nugget. Well, and Josh, let me ask you with regards to the reserve study, right? Now we have, for those that don't know, I'm sure pretty much everyone knows at this point, but SIRs need to be separate and so forth. What are you seeing from your side? How do you guys structure it when you prepare your reserve studies so that the manager, the board know what's the difference of one between the other? And what have you been seeing in the market?
Yeah, most folks usually take it so far to provide two separate reports to make it very clear, just like you said, you hit a key point. Those two funds, those two budgets have to be completely separate. If our roof is in the SIRS, we can't put away money for the roof year over year and then decide, oh no, we need new pool furniture. Let's move all the money out of the roof, get new pool furniture. Everyone's happy by the pool, and now we're short for an important item. So any good provider is going to give you two sets of recommendations. One for your SIRS. What's the bare minimum that you have to do, right? What does Florida require you to fund the reserves? Our firm usually provides an alternate option of what you could do that's a little bit more prudent, but you can do both. And if you want to do just the bare legal minimum, then that's okay. There's a path for that. At the same time, you've got a lot of expenses at your building or at your property that are non-SIRS. Some people don't realize that the elevators are non-SIRS. Your ACs, what's keeping the hallways cool, those are non-SIRS. A lot of very important items that you need to reserve for aren't captured in the SIRS. So we'll prepare a separate budget that's just for the non-SIRS, but there is still some wiggle room there. You can still, by vote of the majority of the owners, vote to waive or partially fund your non-SIRS. So for clients that are having a tough time adjusting to the new cost of living in a condo when it comes to these engineering inspections and SIRS, if there's any wiggle room at all, some folks are looking to the non-SIRS for that. But everyone's knowing, I think like Alex said, that bill's still going to become due at some
100%.
point. So even if we, we vote to stair-step our way into fully funding the non-SIRS, the same check is going to come out of the owner's pocket at the end of the day. And that's what we're recommending to our clients is you really need to follow both reports. It's the best way to be able to plan to even out those expenses over time so that you're not caught by surprise in a few years.
Yep. And
I would add to this,
Alex.
Rafael, it's interesting hearing Joshua speak. And, I remember, a year ago and, the sticker shock of the numbers, et cetera. I think one thing that's not spoken about a lot when you do a study, right? You as a board are relying on professionals. Having that meeting with the engineer when they're presenting the reserve study in a meeting and it's an open forum, and they see the level of communication between the board and when you're speaking to them, and there's adjustments that happen to these studies. A board member will come up with a great explanation. Hey, about that seawall, I don't believe this number because of this, this, and this. And they get very technical. And Joshua, and they'll go back and they might adjust the numbers. But it's important for the community to see that whole process. So at the end, they feel very confident about what the board did to get to those numbers. Because ultimately, you're being held to a standard that you don't have as much control as you once had before. So I always love that about the study. It really removes the board member from the subjectivity per se, and it really puts it to the professionals and for the whole community to see and get educated.
Great point, Alex. It also helps up from a management perspective, right? Where we could, we're utilizing the professionals to guide us, and that's the purpose. Like ultimately, many times, not all board members, but many come from different areas of business or whatever. They worked in different professions, I should say, and they may not have the expertise, but in business, that's what you count. You count heavily on your partners, on the companies that you work with.
Yep.
it's impossible for the managers to know the seawall. But, it is important for the manager and the board to be there, as you mentioned, using that seawall comparison of just asking the questions and, do we really have to go that far and so forth, and just getting questions. That way you're better educated to be able to answer questions to the residents. And sticking to that, the questions, I'm sure, Josh, you're in your team, for those board members that are there, managers get a ton of questions, especially with the increase in cost, inflation, everything that's gone up. A lot of it does also have to do with just sheer supply and demand, again, something that impacts businesses. Yeah. South Florida came out with these laws, and you have construction companies coming down, restoration companies, painting companies, but either way, there's a high demand, so that means the costs are going to be high. So how are you guys trying to balance that out? Because I'm sure you're getting a ton of knock on your door of, let's get that price down. How are you guys balancing that out with, respecting your licenses and so forth?
Sure. It's probably one of the hardest parts of our job. It'd be very easy if I could say everything has gone up by 5% over the past year. My job would be much, much easier. But unfortunately, you're seeing variance in what is driving these things up. Like you said, it's supply and demand for these concrete restoration and painting projects. Everybody on the coast is doing these milestone inspections, and they're doing the work, and the demand is so high that the cost of those has gone up much more than some other projects. For anything that's petroleum based, whenever the price of oil goes up, those items go up too, and it's not relative to everything else in the building. So any good provider is going to be very thorough with their research to make sure every component at the property is being addressed, and you're getting current market pricing for everything. It's very, very tricky, but we're fortunate to be very busy right now. And anytime we're working with an association, we're chasing them for the contracts and invoices and figuring out what did they pay. So if I'm looking in Brickell and I've got a current client who's trying to replace the roof, I can look to 10 other properties that we did in the past year. They replaced the roof and know for sure my roof pricing is good. And the same thing goes for everything else in the property. So
correct. Yeah, I mean, you guys have a database, I'm sure, of what these estimated costs are, and they constantly have gone up. I know we've seen it from our side where a small project was whatever it was, 20,000. Now we're seeing that same project 30,000. So we've seen the increases on our side as well. And Alex, we've talked a little bit about reserves, but that word that nobody likes to hear is special assessment. Tell me a little bit about what should boards be keeping top of mind to try to avoid that. Sometimes it's inevitable because things do happen. Budgets are budgets. Talk to me a little bit about what strategies you would recommend as a CPA or as your firm to try to avoid that as much as possible.
I mean, the special assessments, I definitely seen the difference in the buildings that have been reserving over time and what's required in the special assessments. And I would mention this just for anyone and just the major obligations you're all dealing with. I mentioned that seawall, but that's on my mind because a month ago I have a meeting. It's three different associations that are all related, and one building is they're getting a lot of pushback about certain things, but when the individual mentioned this, it really just enlightened everyone. They did their seawall a couple years ago for $4.5 million, and it hurt. It really hurt. Wow. You know what it's costing the other two buildings next to them? $10 million each.
Wow.
So you really got to think about. I've seen it all the time. In the past 2 years, I've more than ever. I've had to go speak in front of communities. Buildings next to each other, same developer, two separate buildings, and you could just totally see when one has been putting money away and one hasn't. And you get into the point of the special assessments. And just in general, look, at the end, if you have to do it, what's been the bedrock in our industry. There's really great products in our industry, like any other. We have the best interest rates of any other industry. The underwriting is quicker. You just got to be on top of your AR and stuff like that. But what they do in our industry typically is they'll do a line of credit that converts to a loan when the project is done. And that allows the project to be done quick based on immediate funds. But then the special assessment is designed to pay the loan over time. And where we see, so that's how typically it's done. The other option to pay that type of loan is to pay through your operating budget, where you include the interest and principal in the budget. the one thing I would tell you with any of this is you always got to keep tabs on that, because if you have a 10-year loan, if no one's looking at it and keeping an eye on it, you'll find out in the 5th year that you're not collecting enough to pay that loan for a variety of reasons that we could get into, and it's hard to maintain, but you got to stay on top of those schedules. If you receive a lot of prepayments, usually these loans have a right where twice a year you could go and pay down the loan, because when a unit is sold and you have a special assessment, you get all the funds from that essay. That 10-year essay turns into at closing, you get the entire amount. So it's something you got to keep an eye on. But it's definitely about what becomes a challenge is being on top of the bookkeeping with the special assessments. It's a very difficult area in accounting. And, the switch, when you see these things, you got to keep the history, because you will be questioned by your own community when you spend $3 million, 4, 5, et cetera.
Yep, 100%, especially on that. Managing those special assessments can be tricky. It can get really technical as well, because you should have 2 different ledgers. In some cases, that doesn't exist because the software has certain limitations. It's very important that if you're on the treasurer, you're president, you're managing these special assessments, that you are clear on how the process is being managed, because we've seen it where you take on a new client and they're 2 years away from the loan and they're completely short to be able to finalize the 2 payments, and we're having to do a special assessment. Imagine trying to explain to everyone we're doing a special assessment for a shortfall for a loan that's been going around 8 years. One thing that I want to give as a golden nugget as well is if you're there that you need to pass a special assessment, is just keeping in mind whatever future projects you may have, because while Alex is 100% right that our industry has great products, we're pretty quick to underwrite. Banks understand our industry, the banks that work in our space. But normally, once you get a loan, that's a loan. You normally don't have 2 notes on one association. So many times associations are just like, okay, let's do, using the seawall example, let's do the seawall. But if you're coming up on your painting or your restoration or something, you may need to bundle everything up in one stroke. And that way you're taking care of this loan that may be 5 to 10 years and you're addressing a majority of the components. So I know it can be a little bit difficult to have to say, well, now we're going from 8 million to 15 million. But it's important to keep that top of mind, because you don't know where rates are going to be. You don't know what's the next potential challenge that could arise. So you need to be very strategic in your moves whenever you're going to obtain a loan. So it's important to keep that top of mind. If you do it special assessment route, obviously completely different. And Josh, I want to talk to you because I know, we got some relief about 1.5 years ago, allowing the condos to be able to extend. Obviously, they needed to take the necessary vote. We won't go into the technicality of the vote and so forth, but there are associations that haven't passed the CERS because they followed whatever guidelines. What's been your experience overall? I mean, I'm sure you don't have the data there, but what's been your experience of associations that have either waited, have stalled to get through this year? Do you have a rough percentage of what you've seen so far?
It looks like, based off of the last data, that about close to half of associations that are required to do the CERS have actually gone through and done it. I think there's still a lot of folks who are in the wait and see mode of what's going to happen if we don't. Again, you saw in the most recent bill that they're starting to come out with some penalties for folks who don't follow the CERS, talking about fining for board members, recalling board members, opening up board members where their liability coverage won't cover them, D&O won't cover them if they don't follow, which to me would be very, very scary. So you're seeing the industry start to move towards, okay, this isn't going away, we need to follow it. There are still some folks out there who I think are under the impression that if I don't get the CERS, I'll save money, right? If the CERS comes in and says I have to put in extra $1,000 a month, then that's coming out of my pocket and I'm going to end up losing money. But Alex's example with the seawall is true for so many projects that we see, where they say, okay, we can't spend $5 million, so we'll wait a couple years. And then what happens is that it becomes 10. I don't think I've ever seen somebody try to save money by not putting money into reserves that ended up actually saving money. It always costs more. So I would just impress on everyone. It's sort of like going to the doctor, right? You don't want to do it, but the path to being healthy isn't to skip the doctor for 10 years so that you don't find out the bad information, right?
Yeah.
It sounds silly when you phrase it like that, but you need to go to the doctor, you get the blood work done, they build you a path, then you follow it. And that's the path to being healthy. And that's what we want to see in the community association as well.
And Joshua, I would ask you, at a high level, I've seen the language change on the funding methods. Can you give everyone a high level, like there's this baseline, fully funding, et cetera. Can you give it to them? Because I think it's something new.
Yeah, great point.
It's very confusing because Florida has used different terminology than the rest of the industry up until now. But if it's any easier, the actual implementation hasn't changed. So all Florida cares about, not an attorney, this is just how it reads, is that you have to have enough cash to meet the expenses, right? Most folks would call that baseline funding. Florida for a long time called that full funding. But basically, you need to chart out what are my expenses and what's a path where I can fund that I can meet all of those in time. Even if I end up with $1 in the bank one day, I at least have enough cash. That's all Florida's holding you to at this time.
Interesting.
Right.
And that's, again, the importance of having the right providers by your side to give you those tips and suggestions of how to get this done. So great point bringing that up, Alex. And Alex, I know you've seen these insurance costs. I know we're starting to see a little bit of relief with a couple of associations that are going through renewal now. How have you seen associations managing the increase in insurance that we've experienced over the past, I would say, at least 5 years? Any particular strategies, or just been something that's been difficult to manage?
Yeah. What I noticed, not this season, but the prior season, there was a lot of one and done special assessments for the shortfall because it was just too much. They couldn't afford it, and it really skewed their numbers. So they were doing special assessment for that 1 year. This year, we didn't see that many. It's calming down. But it seems like the go-to move when they'd had to was a special assessment. I've seen some stuff. It's very rare. The 1%ers that have voted to use their reserves because they know they don't have anything that year going on. They'll use it from 1 year, but that's extremely rare. But it's definitely via the special assessment route is what I've seen.
Yeah, same. For us, it's been a combination of it all, right? We've had associations that just want to do a special assessment to avoid even paying the interest payments that exist. But yeah, it's been all over the place. Fortunately enough, we are starting to see a bit of relief, really depending on where the property is located. I would say properties more on the west side are getting breaks. Even some on the east side we're starting to see some relief. We're very fortunate this year. I don't want to kind of say it yet, but it looks like we're going to get through the season without getting impacted, the entire state of Florida, which is something that will relieve a lot of things, not just having to deal with the hurricane itself, but not just to deal with insurance, but also cost, right? Imagine these contractors having to deal with restorations and everything that they have to do with the SIRS, and now having to rebuild on certain parts of the coast. It just compounds. The cost just compounds, and the costs for these kinds of things compound. So, and Josh, I know you said you've seen these underfunded association. I guess that 50% that haven't done it, haven't done the reserve study, whether it be condo or HOA. Any tips that you could provide, or strategies that you guys do to try to be able to alleviate it? Or is this something that, look, this is what it is? I know for the SIRS it is, but any tips or things that the managers could take away?
Sure. I'd say once you get that reserve study, you're seeing a lot of folks in the industry use this as their wake-up call, right? They know they've been underfunded. They're not sure by how much, but once they get the study, it's black and white. This is what we need to be able to meet the reserves. And you're seeing some folks just say, okay, we're going to go ahead and bite the bullet this year, but this is the worst it's ever going to be. This is our time to right the ship, right? If we had to pass a special assessment, you had to raise the dues, then okay. But if this reserve study is right, that's the last special assessment that we're going to have to pass for reserves, because now we're actually budgeting appropriately for these things. And I think you start to see some owners resonate with that. People who have had to write special assessment checks every 3-4 years for things that they did not see coming. It's painful. Nobody likes it. But if we can build it into the dues, we can see it coming. That gives people a bit of assurance and peace. It also helps the buyer, right? You're seeing folks start to become a little bit savvy when they're buying into Florida. They don't want to buy, and the next year you have to write a big check for a special assessment. That should have been included in the price of the home.
That's right.
But if I'm buying into a place that I know is funding reserves, they're not passing special assessments, I feel safe when I'm buying into that unit, and that affects the market price.
That's right. Yeah. I mean, one of the things we were recommending our clients as the law was coming together, and even, last year, was let's get the repairs done, right? Because if we can kind of reset that clock on the reserve study to bite that bullet on a special assessment or a loan, your team comes in, does a reserve study that kind of resets the expected life of whether it be paint, concrete restoration, roofing. And that alleviates a little bit, right? It doesn't change the figures drastic. Well, it can if it's a 30-year item, but it can alleviate significantly for those associations. Ultimately, now the ones that have reserve studies, you should be painting your building every 7 years. If whether you're an HOA doing your roadways, and you're going to find that it's going to be much, much easier, as you stated. So let's get into now a little bit of transparency and communication. With so much that's happened, unfortunately, South Florida is always under the limelight when it comes to transparency, financials, and so forth. So I want to talk to you a little bit, Alex, about what roles can either the treasurer, management play in really providing transparent financials, building trust with the residents, especially with the larger communities, right? It's still important with the smaller ones, but the larger ones, when you're talking about significant amount of money, it can be a little bit easier. So tell me about what you've seen boards do or what you recommend.
Well, especially with the larger ones, there's an inherited, something's going to happen in 3 years with large associations. And it could be as simple as one unit owner really voicing their opinion, and the trust that has been built starts coming down, which leads to what you've always should be doing as a board is, yes, getting the reserve study, yes, having those meetings transparently out there having your meetings where unit owners could attend, they could see you work that really hard, and also working with your management company to prepare the budget with these reserve study and come up with a solid plan. One of the things that I see not too often that I'm actually becoming more advocate on my side regarding my clients is have this meeting with me or my auditors about your draft. Let's have these discussions. Again, the floor is being raised. So it isn't just about issuing the audit, and you should have an idea of what's being said. And boards a treasurer is my last safety net, right? Mm-hmm. These reports are supposed to be written for the person that's not a CPA. It's for a user of a community so they can read it. So if you read that and you see some language that doesn't make sense based on all the minutes you passed, all the meetings you had as a board member, it's the point of where to have that conversation so the report gets issued correctly. And the report reflects everything you've done for the year. So it's budget, it's the audit report, and it's your reserve study. Getting those in line and they're all going the same direction is huge for transparency. And a lot of times we deal with the management too, right? In regards to all of this, but it's important that, at least one of the board members or treasurer is involved at the end of the engagement as well.
Yeah, I think that's a great tip. Number one, great service to be able to provide, because it provides that clarity. And to add to that, I mean, that's again utilizing what we spoke earlier about the reserve study, is utilizing that as a tool to be able to communicate to the residents of what's going on, what's happening, either put it on the newsletter with the link of where they can grab it from the association's website, because now there's requirements, even for our HOAs. Now soon HOAs, I think it's at the end of this year, is 25 units or less are going to have websites. So, again, just making sure that you're keeping that transparency and that information out there. I can tell you from our experience, even if it's out there, you're still going to get knocked on that, oh, you're doing this or you're doing that. But ultimately, you'll be able to put your head on your pillow by knowing that oninformation does exist. Josh, you wanted to say something?
No, just echoing that sentiment. The more transparency, the better. At least the owners know what's going on in the community, and nobody's getting caught by surprise.
Yeah, 100%.
And I'll give you an example. Right now, I just had another meeting yesterday. I have an audit that's been held up for over a month, over $587,000 on a prior SA, and they're currently dealing with a $40 million SA.
Wow.
But that 587 is creating a level of mistrust in the community, and they're not doing anything wrong, but I'm literally having to re-audit a section from a prior auditor, redoing it and elaborating in the notes. And I'm going to go and speak in front of everyone, because what it has caused in the community is it's incredible. And they're really working really hard. I could tell you with the new essay, they're working with the bank that is approving every invoice for the project. So everything's being done on the up and up, but this is the kind of stuff that causes major ruffles in the community.
Yeah, no, and listen, with like as we mentioned, as I opened up when we were getting into this transparency conversation, unfortunately, we've had situations in South Florida that have raised people's eyebrows. The reality is that it's a very, very small percentage that it does occur. And when you really dive deep, where it does occur is where there is not professional management. But that's another conversation for another webinar. But yeah, I mean, it's great that you're doing something like that, but it just goes to show of the importance of working with a partner. I know we've taken on those what you call essays, just for those listeners that don't know, those are special assessments where they're not clean. It's just not clean. And we're having to bring in someone to clean it up and provide that sense of detail. But again, it's the importance of working with the right provider and understanding that if you're a board member and you're in that situation, if you're working with the right provider, they're going to guide you through it. And that's what you need to make sure that you're doing, not just focused on the price and focused on whatever other thing may be. It's how are you going to help me get through this situation, because it is a difficult situation. There's no way around it. And I guess from the reserve standpoint, any recommendations, Josh, for the board on having more transparency or communication when it comes to that? And I think what's important maybe possibly to outline is, once they've done the reserve study, what's the frequency that you would recommend to redo it? Because we don't know where costs are going to be tomorrow or in the next 3 years. And last thing you want to do is you're guiding yourself by this tool and you're falling short. So tell us a little bit about that.
Sure. Yeah. Post the SIRS, post the traditional reserve studies on your website. Let the owners know where their money's going. I think everyone wants to know. Can you repeat the second part of the question?
Yeah, with regards to the reserves themselves, what's the frequency that you need to redo it once you have one? And do you recommend doing the entire thing, SIRS and non-SIRS, or just doing one component of it?
Yeah, industry standard and National Reserve Study standards recommend having an on-site visit at least every 3 years. And in other states like California and Washington, where reserves are required, that's standard practice. Every 3 years, somebody needs to be on-site inspecting your property, see what condition is in, updating the costs, remaining useful lives within the report. However, we have an enormous amount of our clients that actually come to us every year. Now, we don't have to come out to your property, but if you send us your new budget, we can update you with all the new costs. As you've seen, the price of milk and eggs in the grocery store, everything is going up significantly year over year. And the last thing you want to do is be caught short. Or by some miracle, you guys are doing your elevators or your roof ahead of time, and now maybe you're further along in your reserve journey than you thought, and we can bring the numbers down. That's always a nice thing to do in a report.
Yeah, great. And it's important to know for both board members and managers that the cost is not the same every single time. The initial one is typically more, but yeah, it's a much better cost because you already have an understanding of what the components, the assets are, and what they're looking at is more of, okay, where are you from a dollar perspective? What's been updated? Because sometimes, again, maybe the roof needed to be changed. It said 3 more years, but it needed to be changed this year. Okay, what are we looking at? So, it's a very minimal cost, I would say, in comparison to the main objective of what you get from the tool. And Alex, I guess bringing you back, large capital projects, kind of going here now into long-term planning for these associations. If they have reserves, let's say they fall short, what have you seen? I know we spoke a little bit about loans, special assessments, anything else there that you want to add that would be able to help with the long-term planning portion?
I do see sometimes if the community could afford it, I'll give you an example. I just had, someone asked if they just have money, right? And they just want to move it to reserves. And I'm like, no, hold off. Keep it in operating because you don't know what's going to happen. But the way a good little practice is, for example, you're going to do a project, let's say the elevator that's sitting there, your non-SIRS, and you got the quotes and you're like, well, I only have 100,000 in my bucket for that. But the quote came out of 120. If you could afford it, you grab from operating to take care of that line for the 120. You know what I mean? So that's where I've seen that type of ability to do that. If you do it, other than that, yes, you end up going the financing route if it's substantial. But the special assessment, is probably number two, right? Can you
Yeah.
afford it in operating? Your second one is a special assessment. The third would be the financing, and something you alluded to, Rafael. When you're doing that, you want to think bigger and more robust, because you get one rate today, you do a project, but the minute you got to do more, you got to go to the same bank. Or if you try to go to another bank, it has to be substantial enough that they'll take over that prior loan, because they're not going to have two loans out there from two different banks, and you're going to get a whole new interest rate.
Yep.
So those are your risks.
Yep.
So you definitely got to have a plan, long-term plan, not just a short-term when you're dealing with these capital projects.
Yep, and it can get complex, not to scare the board members or managers, but once you're refinancing, you have to deal with prepaids. There's a lot that goes to it. But I guess I want to keep it with you here, Alex. I know we preach what we preach here is, what do you recommend from a budget, using, let's say, that bottom budget number of what they should have at all times in the operating account? Like what would you say is a good either percentage or number of months? What's ideal?
Ideal that you would hear from me and my peers, it's 1 to 3 months.
Yeah.
Idea is what you were trying to do is to maintain 1 to 3 months of working capital. And for those that don't know, think about it like this: you're passing budgets that are for the foreseeable next 12 months, your cash outlay. But when you receive the assessments versus when you pay bills, there's a timing difference. So your property manager needs X amount of dollars to get by through those timing differences. This is what we call working capital in our business and in our associations. So yes, 1 to 3 months is ideal.
Yeah, that's exactly what we try to recommend. Sometimes it's difficult for them to understand. Why do we need that? But as we said, we don't know where the economy's going. Now we're starting to see with certain of our associations, we're starting to recommend the bad debt, right? Again, because we're starting to see delinquency slightly tick up depending on the property and its demographic. We are starting to see, a slight tick up. The job numbers weren't that great. Expectation is that they continue to go down. So again, as board members, as managers, we need to be strategic with our clients, advising them of that, letting them know, look, this is our recommendation. It's up to them to make the decision of what they want to do. But it's important to, think ahead, not just thinking of, okay, what are we doing for next year? It's what could potentially happen next year that we need to prepare for, so that we avoid those special assessments. We avoid having to ask for a loan and going to the owners, because in difficult times, I started this business in 2008, and I could remember vividly those difficult conversations of having to either increase and pass a special assessment, increase the budget, and pass a special assessment because they were falling short, and the owners just didn't understand why. And it's difficult, but it's again, we've got to be strategic in what we do. So I guess just to wrap up here, Josh, I'll start with you. Any, last minute advice for the manager or board members that, are in the midst of, preparing their budgets, in the midst of wrapping up their SIRs, any golden nuggets that you have for them?
I think the key thing that we've been all repeating today is to think ahead, to plan ahead, right? If you know you've got projects coming up, go ahead and start to get 3 bids. It doesn't have to be a project that you're doing tomorrow, but the last thing you want is to be up against a failing roof. You have both of your elevators failed, and now you're trying to go out and get quotes, because those are going to be much, much higher. They know that you're under duress, versus going ahead, planning, and using those numbers that you get and put them right into your reserve study, right? If we have a bid for $500,000 for the roof, any reserve study provider should be able to plug that in right to your reserve study. And now you know you're putting away your money for a good expense.
Awesome. Great. Thank you so much for that, Joshua. And before I go to you, Alex, we do have one question that relates to you, and then I'll let you do your closer. Okay. Jerry asked, what is your definition of working capital?
The definition to me, working capital, if you let's say you have a budget for $1 million, you divide it by 12, and that is, for all intended purposes, a quick and dirty way to say I have a month worth of working capital.
That's right. Yep. Perfect. And any last golden nuggets or takeaways that you want to give to our managers or listeners today?
It's a little bit self-serving, but it also is it's great for everyone, especially when you're dealing with these new standards, etc. Listen, right now it's September. Don't wait to review. You know what happens? You get these monthly financials from your management company or from your bookkeeper. Don't wait until the end of the year to really dive deep into those numbers and cleaning it up. Because I've been on the other side. and the bookkeeper, and they're going to be inundated in December by a lot of board members who are now looking at the December package because they haven't looked at it all year. Look at it now in September. Beat it up with them. Work hard. Get those cleaned up. By the time December comes around, you're going to review December and feel comfortable with it and get it out quickly. The name of the game with all the audit firms out here, we have a deadline. In this year, it's going to be May 31st for condos. HOA are still April 30th. But the idea is, if you're able to issue those December early, it really gets it out there and puts the responsibility on your auditor to finish the audit on time. So please do that. And it's something that you have control over now, where you have the bookkeeper that could work with you. But yeah, other than that, everything you heard here, what you're hearing here is best practices and what boards are always striving for and what they need to do to accomplish these goals and meet these standards.
Excellent. Thank you so much for that. I want to add to what Alex mentioned. I think that's a great point of cleaning up your general ledgers now with any of those challenges. But more importantly, it's also the documentation that's necessary to be able to complete either your audit review or financials. But lastly, is just making sure that you're working with your partners to help guide you through this. It's important to understand that I can speak from the management side that, many times it's just all the manager needs to do as a manager, but it's important to understand that we rely heavily on our vendors. And many times it's like, well, why are we contacting them? There's a cost associated to that. But it's important to know that they're the experts. They're the ones that advise us, that give us the necessary guidance. And to close up, just want to really thank everyone that's here today. Thank you for taking the time to gain some additional knowledge, as Alex and Joshua mentioned, of getting that knowledge that helps you be a better leader within your community, whether you're a manager or a board member. We will be posting the video up on our YouTube channel, managedbyaffinity.com, within the next 24 to 48 hours. Feel free to share with your board members or with your residents if necessary. And if you need to contact any of us, you can reach us at info@managedbyaffinity, and we'll provide everyone's contact information. Thank you all for being here today, and we look forward to seeing you in our next webinar. Thank you, guys.
All right. Bye, everyone.